Let's move that point to you then, Matt, and say, look, with these types of solutions that we've been discussing now, yeah, what are your experiences with them, and can you tell us a few pros and cons that you've experienced on the front line?
Yeah, certainly. So I think if I can start with the negative first of all, if that's allowed. So when I've seen inheritance tax delivered in the past, very often the advisor has started with a solution. So because they are strong in a particular area. So if it's an investment manager AIM portfolios, or if it's an advisor who's particularly focused in on discounted gift trusts, it very often seems like whatever the IHT question is, the solution is X. When actually in reality it needs to start with the client. So it's what the clients need, so what their capital position is, but importantly some of those emotional things about, am I happy just to give it away? And one of the benefits of trusts is that they're proven and they work. One of the drawbacks is they can be quite inflexible, so it can lead you into problems further down the line. And in fact, we've spent probably as much time unwinding trusts as we have putting them in place, because they've stopped being the right solution for that particular client or that family. So I think it does depend largely on the client and their own position. We've talked about the loan trust for capping growth in capital value. Just towards the end of someone's career, when they're late career coming into retirement, perhaps those golden years where the kids are off your hands, mortgages paid off, all of a sudden you've got surplus income for the first time since you can remember. Then surplus income trust, so regular gifts out of income, which can be quite sizable if it's someone sort of towards the end of their career, into trust. It's just making sure that you're deploying all of those solutions to make sure you're using all of the obvious legislative allowances before you get too clever and start playing around with some of the more complex planning. So it's making sure all of those things are covered off, and that means you've got to be a good generalist in IHT planning, because you've got to understand all of the solutions to be able to deploy as many as is relevant really to the end client. And there's so much, I mean, Tony was saying it earlier, there's so much that you can do to avoid inheritance tax, such a broad range that really, unless you've got a client that's super wealthy, you ought to be able to get most of those IHT liabilities down very substantially, if not to zero, given long enough.